In a lot of cases, the fintech layer is lipstick on a pig. So like the underlying infrastructure, the problem of trying to move Canadian dollars to US dollars in an instant settlement, it has to do with the actual wiring of the infrastructure, which is still so outdated. It's like 1970s, closed networks, the analogy of AOL and CompuServe and Genie being completely closed computer networks that don't talk to each other. This is where, obviously, I'm going to be a believer in blockchain as the bet for the year ahead.
Great answer.
Hey, everybody. It's Eri from Tokyo. This is your cryptocurrency update from Japan. You see what the market is doing at a snapshot with this glance of the top 100 by market cap. It's a little mixed, but it's nice to see Bitcoin is hanging on very strong to the $70,000 mark. And that intro was Ripple's president, Monica Long. Yeah, we're going to hear a little bit more from her at the end of this video. But what I want to point out is that the rails are still very much legacy. And of course, Ripple is putting their bet that they can make that change, but I think it's still a very long way away. We're going to talk about ODL, and does it really matter to the price of XRP? ODL standing for the old term that they used to use, the on-demand liquidity, which has been rebranded to just Ripple Payments. Somebody very aware on the street caught Brad Garlinghouse and Stu Alderati going to the court. Yeah, very interesting. So this settlement conference was scheduled for today, March 29th, according to Ellie Terrett. The defendants had to attend. So really, it's a nothing burger, everyone. It was just very obligatory. I don't think there was a settlement reached because we have this tweet from Stu who said 7 years after the Dow report, which the SEC claims provided clarity to crypto, the SEC is still litigating 8 major crypto cases in federal courts with no end in sight. Something's broken. And I don't know what's going on here. The Empower Oversight sued the SEC for more crypto conflict just as recent as March 18th. So they filed this lawsuit against the SEC in its failure to comply with the Freedom of Information Act, where they wanted documents related to the cryptocurrency conflicts, specifically Hinman's conflict. But look at what happened yesterday. According to Law 360, which is quite credible, the SEC settled the suit for the documents over the potential crypto conflicts. So yeah, we have to really get more information. We're only at a point where we can speculate why they settled. I heard Jungle Link have a fairly good idea, but I'm going to wait and see and try to get that answer. On the screen there is Blockchain Backer, and an attendee at the conference in Australia sent me this image that Blockchain Backer had used in his presentation, and it refers to the high development activity headed into the expansion of 2020. He was looking at previous years to draw correlation and pattern. And he said, the person who sent me this, that this slide changed his whole perspective on crypto. And what's interesting to me is that from the list of the top 20, Ethereum, Cardano, Genesis, Bitcoin, Kusama, Celo, Solana, Cosmos, and Polkadot are still in the top 20 today. Blockchain Backer, you had a great presentation. And if anyone watching this video is curious to see development maybe on other chains that you own, go to the developerreport.com. I had a first time moment again in the crypto space. I don't think those are going to go away anytime soon. And this was on the FLARE Network's Costin testnet. And it was using the XDeFi protocol with their free FLARE Faucet. And I placed my first futures contract on the world's first regulatory compliant, non-custodial, and decentralized futures trading platform. That's really a big deal, everyone. Yes, I am long on my 24-hour contract. Yes, so you can say that some are bullish. I am long. The beta is live, and it was very easy to use. The user interface is very easy on the eyes. It's easy to use. I had just a little bit of confusion when it came to funding my wallet with the free FLARE faucet that can be regenerated every 24 hours. But it wasn't based on the UI from the site. It's just me being a little slow with how those free faucets work. But there is a step guide, and just don't give up. You'll figure it out. I think it only set me back about 5 minutes. And we see this picture that was posted by Santiago Velez, one of the co-founders of the site. He's there pictured fourth from the left. And this is the team that built the platform. He says it's the best devs on the planet. Moving right along, I don't know where all these hype channels are coming from, both on X and YouTube, but it sure seems very strange that all of a sudden there are so many anonymous channels and people just going to the moon based on using the digital asset XRP as a bridge currency. I'm sharing with you a Ripple's Wells submission for the SEC. And you can see here that ODL transactions are demand neutral, therefore do not impact the price of XRP. This is why I've been saying for nearly 2 years now, you can't rely on Ripple to build value or price. We need to focus on the new builders and devs using the XRP ledger. I'm going to play for you my buddy Moon Lambo, who first highlighted this tweet that I put out nearly a year ago regarding this information that we found on the Ripple's submission. And I will put a link to their Wells submission in the description of this video. So if you want to take a look at it yourself, you can. It's on their website, but it's not an easy URL. But listen to Moon Lambo here. And then following Moon Lambo will be Monica Long again, from that event that she attended just about 2 weeks ago. All right, everybody, do take care. Sayonara for now. Bye-bye.
But Brad Garlinghouse's tweet was retweeted by my fellow XRP YouTuber Crypto Eri. And I guess what prompted her to share some of this is something that she recalled from Ripple's Wells notice. And off the top of my head, I don't think I'd actually seen this before. Maybe I just don't recall because it's been a couple years. I don't see a date on this document here, but Crypto Eri shared this document. This is on Ripple's official website, summary of Ripple's Wells submission. And since it's a Wells submission, this means that it would have been filed before the SEC actually officially sued Ripple. So they would have gotten a Wells notice, which is the warning, hey, we intend to sue you. And then the commissioners would have voted, and they did vote, as you well know, of course did. They were going to go ahead and sue the hell out of Ripple, and attacking all XRP holders the world over in the process. And so before that lawsuit was filed, again, this document was shared pushing back against the arguments that the SEC had made to that point. And there's a few parts that Crypto Eri highlighted here. And so Crypto Eri wrote the following: Ripple's Wells submission. She's got 3 points. Number 1, Ripple interaction with XRP community does not constitute efforts of others. And this is from Ripple's Wells submission here. And I can see why she decided to share this while retweeting what Brad Garlinghouse shared, because he's in public here at the XRP event, and obviously it's the case. I think that all of us would agree here. That does not constitute some sort of efforts of others. Ripple and Brad Garlinghouse, they're members of the XRP community, just like I am, just like you are. You know? So of course not, but they had to blatantly state this here. And then number 2, Crypto Eri wrote, on-demand liquidity is related to Ripple business, not XRP. And number 3, and this is the part that, again, I don't recall having seen anywhere ever before, and I don't think I'd seen this document. And so Crypto Eri shared this part. 3, on-demand liquidity transactions, purchase/sale of same amount, and does not impact XRP price. And so there's the snippet right there at the bottom. And this is something that I've been articulating for a very, very, very long time. So I wasn't surprised to see it I just wasn't aware of Ripple having ever articulated that point anywhere ever. And in terms of why this is true, and this isn't a negative, by the way, don't think for a moment that this is a negative. You just need to understand the ecosystem. So why is this true? Well, if you're talking about XRP as a bridge currency, I'll assume that we understand in a general sense, all of us listening, how that works. But, you want to convert from one fiat currency to another, turn your United States dollars into Mexican pesos, for example. So there's an exchange utilizing on-demand liquidity in the United States. And so a bunch of XRP is purchased in the United States on that exchange in the United States. Then the XRP is moved to a Mexico-based, this is just an example, obviously, a Mexico-based cryptocurrency exchange would be Bitso in all likelihood. And then it's sold into Mexican pesos there. And it all happens in real time, effectively. 3 to 5 seconds is what it takes for the ledger activity. And then there can be, the rails on each side of that can add, in theory, like a little bit more time. But for all intents and purposes, it's real time activity. So when you're talking about these transactions, there's always going to be a heavier flow in one direction than the other. So if there's a bunch of purchasing XRP on one side, you might think, okay, that might raise the price in that market. And then but then on the flip side, there's an equivalent sell side in the other market. So on the exchange in Mexico, there'd be a bunch of sell pressure. And so you can understand, obviously, if there's a notable increase in sell pressure, that might lower price. So what ultimately happens is people recognize disparities in price and engage in arbitrage. They notice the gap, and that's what evens out markets on a global scale. And because that's the case, when you're talking about utilizing XRP as a bridge currency, none of those individual transactions are just, if you just look on an individual basis, those are not going to impact the price of XRP. But that,
I would say our business, our network has had the most uptake places where there has been regulatory clarity for licensed financial institutions who are our customers to use a crypto rail. So that's places like Singapore and Dubai and even Europe. Europe, 27 countries came together to form the MiCA regulation, which is a common framework to handle crypto assets, whereas the US, there's a regulatory battlefield between the different agencies to fight for territory.
And do you see that as sort of like blocking your business or hurdles for your business, or do you see it as almost like a necessary evil? I think back to Coinbase, right? And a few years ago, they weren't able to expand in the way that FTX or some of the other crypto companies were able to, and in the end, they're still standing, at least. So do you think that tighter regulation, that more stringent regulation is ultimately good or bad for the crypto industry at large?
I think regulation is good. Clear regulation, though. So we have kind of chaotic regulatory climate for crypto in the U.S. right now. Companies like Ripple and Coinbase and Circle, we're U.S.-based companies, and we actually we hold a really high bar for meeting compliance. The same bar that banks meet for KYC, AML, OFAC, BSA. I mean, we follow all the same standards. And the businesses that are operating outside of the U.S., where they're performing regulatory arbitrage, you think of the FTXs of the world, that's where you see the trouble. And then there's this kind of political weight thrown into focusing on the fraud cases, whereas the actual really useful use cases for the technology kind of get suffocated. So I've been at Ripple for 11 years, and so I've seen a few of these booms and bust cycles. Coming up this year is the Bitcoin halving in April, so this is a 4-year cycle, and with more constrained supply and increased demand, this is kind of why we see this boom cycle continuously happening. The approval of the Bitcoin spot ETFs and the introduction of those products in the US has been very meaningful for the institutionalization and legitimization of the industry. And I think that, well, actually, an interesting fact is, because you might kind of attribute it to, well, there's just a lot of excitement about the halving. But if you rewind time a little bit, Goldman and BlackRock and Robinhood, these large institutions launched their kind of crypto products in the bear market. Like Goldman introduced their $100 million tokenization fund to tokenize bonds. That was in the bear cycle. So I think that there's a real long-term buy-in and belief by the institutions that this technology is not going away.